clear.
All right, thank you very much, Noah. And of course, we are hoping that food prices will come down over time. And of course, this is almost that time that people around North Rift, that is the areas of Uasin Gishu, Trans Nzoia, are just about to harvest their maize, and we hope that will have a positive impact to the pockets of many Kenyans. Now, we want to switch gears and have that conversation around property taxes and the impact that then that has to the larger economy. Now, joining me this afternoon is Marjorie Kivuva, who is a real estate and finance partner and also co-founder at Taro Agility Africa. Marjorie, welcome to the studio.
Thank you very much, Jimmy.
All right, so first things first, when you talk about real estate and investment in that space, of course, there are certain areas of concern in terms of taxes. Before I invest in that space, what are some of the taxes that I must be aware of?
Okay, thank you for that question. So one of the taxes that you need to be very aware of is capital gains tax. And that is a tax that is on the capital gain you, as a property investor, get when you sell off land. The Finance Act recently changed this in January from 5% to 15%. There is also corporate tax if you're in the business of selling land or property, which is at 30%. At the end of the year. There's also stamp duty tax. In urban areas, stamp duty tax is 4%, and in agricultural areas, it is 2%. So those are some of the high-level taxes that you deal with as a property developer.
And of course, the one thing that we've seen a lot of property developers contending with is the issue of due diligence. So when I'm doing my due diligence as an investor, maybe an investor from outside Kenya, what are some of the key things that I must check and make sure that I've taken care of?
Okay, so the Constitution of Kenya provides 3 types of property in Kenya. There is public land, which is held by the government or the county government, the national government or the county government. There is privately held land, which is held by individuals, corporations, or trust companies. And then there's the community land, which is held by communities. So it is important for a foreign investor to get professional services from a lawyer or a surveyor to ascertain where that property falls, whether it's public land, private land, or community land. So for private land, for example, usually what you do is get your title and do a land search at the registry. Recently, we have seen Supreme Court cases saying that we have to ensure that we advise our clients well and make sure they do what we usually call a root of title search, that you have historically checked who owned the property from the first owner of the property when it was allocated. So it is quite important to make sure that you get the right legal professional services to ensure that you have historically checked how the land moved from the government to the current owner.
Yeah.
Yeah.
All right, so when you're looking at some of this taxation, and again, real estate particularly is a capital intensive area of investment. So when you're looking at some of these areas of investment and maybe you decide to come up with a joint venture, so what are some of the things that you really need to consider when drafting these joint venture agreements?
So the 3 things that I think each property developer needs to make sure that they have structured well. And structured well means that you are proactively doing at the start. You have to start with the end in mind. So you have to proactively structure your legal structure when the 2 parties or 3 parties are coming together. Your tax structure should also be considered in mind, and your operations structure, so that by the end of the day, your profit extraction or the bottom line has been maximized for the benefit of your shareholders.
Yeah.
Yeah. So you need to ensure that you have your legal and your tax and your accounting structures well in place proactively at the beginning of the joint venture. For example, if you're funded by debt or equity, which is the best structure legally or tax-wise that will be able to have profit maximized for that structure?
All right, so Marjorie, we recently saw, and this is something that you touched on, particularly on the issue of the Finance Act of 2022. We saw that capital gain tax was tripled from 5% to about 15%. In terms of the pulse of these investors, what has their reaction been, and particularly to the issue of a capital gain tax?
The reaction has been quite a warm welcome by the people in the economy, because we have been enjoying 5% for a bit of time, and our counterparts in Uganda and Tanzania have always had capital gains tax. So the increase, I think, where we need to we have seen is that the cost is still being shouldered by the purchasers. It's being transferred to the purchaser or the unit buyers. But the appetite for real estate is still there. It's a compliance issue.
Mm-hmm.
Yeah.
All right, so let's talk about, in terms of the long-term effect of some of these property taxes. In the long run, do you see a lot of investors looking at property as a way of investment, or are we likely to create an environment where investors are looking for different alternatives to put their money?
Yes, I would agree with you. It is becoming a bit intense for property developers and people in the industry, with the taxes continuing to increase. So that will definitely affect the business environment, and that's something I think the policy makers at National Treasury need to look at in terms of creating a better business environment for property developers.
All right, so when you look at some of the tax measures that we have put, and particularly in as far as property goes, do you feel that property taxes are discouraging home ownership, even as we continue to talk about the issue of affordable housing?
I think the issue is about the business environment and the amount of disposable income that people have. The taxes are just not affecting the real estate industry. I think as an individual, there are so many other taxes you're paying. So yes, it may discourage people from entering into the real estate property market if the taxes continue to rise and rise.
Mm-hmm.
Yes.
All right, so Marjorie, can you talk about conflicts? Particularly when by the time we got into an agreement or a joint venture as investors, the taxes were, let's say, at X, and now maybe want to dissolve the company and the taxes are at Y. Then how do you solve that dispute? Because again, at the end of the day, real estate and property taxes, most of them, property investment, people are looking to make profits. So how then do you come up with a solution that everyone goes home happy, that we have factored in the issue of taxation and the different tax regimes that we have been operating under to come up with this solution?
The solution is to start at the best footing, because change in law, you might not be able to predict it. Yes, but at the beginning, we all know that this is the tax that is payable. So how can we optimize the tax that is payable at the moment? And that is what we do at TARA. We help you figure out where you can maximize your bottom line with the current taxes in place. Mm-hmm. Even as change in law comes in, you've already maximized your position before the change in law comes in.
All right.
Yes.
So from a legal standpoint and from a policy standpoint also, I just want to get your thoughts and your sentiments, particularly to the investment landscape in as far as property is concerned, because again, we're seeing a lot of properties being auctioned at the moment.
The landscape is that there's a deficit. So there's a housing deficit, and the property developers are keen on bridging the gap. The issue is the financing. That is where we are seeing this kind of a bridge that needs to be covered. The commercial bank rates are quite high right now. So for us, we're looking at how to make it look more funding friendly, so that property developers have financials coming in at good interest rates if they can do a joint venture and see how shareholder value can be maximized between private financiers and landowners.
Mm-hmm. So do you find that joint ventures are attracting capital, and particularly from the financial institutions, or do we still see financial institutions being very skeptical in terms of investing in property?
So financiers from a bank perspective are very skeptical, but private individuals and development finance institutions are more conversant with lower interest rates and are easier to convince, because It's capital intensive, and it will also take a bit of time for you to realize the units to have been built, have been sold. So we are finding them a better route for landowners than banks. The interest rates are quite punitive right now for commercial banks.
All right, Marjorie, thank you so much for making time for us. And of course, the big conversation, not just from where you sit, and also even in the banking sector, in the financial sector, is the question of interest rates. And we, of course, hope that something will be done just to make sure that we bring them down to a manageable level. On that note, we're going to take a quick commercial break. When we come back, we'll be talking about CRBs, credit reference bureaus, and how they are going to, the impact they're going to have in your credit life going forward. Stay with us.